Welcome to the 3 in 10 podcast. I'm Scott Slayton, partner and chief strategist at Capital Creek Partners. In each episode, I'll give my brief perspective on 3 things we think market participants need to know this week, and we get it all done in 10 minutes or less. For additional resources and analysis, please visit our website at capitalcreek.com. This is your podcast for June 27th, 2025. Our 3 things are: number 1, new highs in the S&P 500 index. Number 2, the possible meaning of Zohran Mamdani. And number 3, the U.S. housing market. So let's dig into number 1. We've seen a remarkable recovery from the April plunge in the S&P 500 following Liberation Day. But that was really a move that started back in February and brought the markets down 21.4% on an intraday basis. A bear market, in effect. We think this is a new bull market, as the S&P has rallied 28% in almost nonstop fashion since the trade pivot on April 9th. The S&P is now up 4.5% year to date. Not so bad, but badly lagging the rest of the world, where many global indices are up well over 20% in dollar terms. The near-term rally may bump up against the July 9th deadline, where the trade reprieve wears off, but we're pretty sanguine about this. We think the markets have moved on from the trade noise, and we expect a can kick on July 9th. We never thought it was realistic that 90 trade deals could be negotiated in 90 days. Maybe we have 1.5 at this point, so it's going to take a long time. Under normal conditions, a complicated trade deal can take 2 years to negotiate between countries. We think these are deals in principle or outlines of deals. And the focus is shifting from trade to the One Big Beautiful Bill, which also faces a deadline on July 4th. We think this will move deeper into the month of July, but we're fairly impressed with what's going on in the Senate and the progress that's been made. And there may be a vote in the Senate before July 4th. We think the point to understand here is this is a global bull market with broad participation. The MSCI All Country World Index seems to make new highs almost every day. The Emerging Market Index also getting close to a new all-time high. The Nikkei 225 index nearing new all-time highs. Euro stocks also trading close to all-time highs. So it's a global bull market. It's not just a U.S. bull market. The technicals in the U.S. equity market are very solid to us. We saw multiple Brett thrusts in April. That's when advancing stocks trounce declining stocks on very heavy volume. We saw this in April. We also saw the percentage of equities above their 20-day moving averages at very high levels, high enough to be a kickoff sign to a new bull market. We saw a 9-day-in-a-row rally in stocks. These are important signals that often kick off a new bull market. July is the best month for the S&P 500 over the last 20 years. It's up 10 years in a row for an average return of almost 4%. That makes it clearly the best month in the last decade. Second quarter earnings will be a test, but we think the bar is low for expectations. Revisions have been coming down since March. And we know that corporate America has a very strong habit of beating low expectations. So we think the second quarter will probably surprise on the upside. Our target for the S&P 500 all year has been 6,300, which is 23 times our blended estimate of $272. We're only 3% away from that target, and we'll have to reevaluate when we get there. But we think the odds are pretty good that we get there even in the month of July. The thing investors need to understand is this is a bull market, and our job is to recognize that and participate in it, even though there's a massive wall of worry. Worry over trade, worry over geopolitics, worry over the dollar, worry over policy, worry over the deficit. The stock market climbs this kind of wall of worry, and we think it will continue. Number two, what is the meaning of this fellow, Zohran Mamdani, and his winning of the Democratic mayoral primary in New York City? Well, there's been lots of hand-wringing over this primary. We really see it more as a repudiation of the return of Andrew Cuomo to politics. He seemed to us to be kind of a tired and unattractive candidate. Mamdani effectively and consistently appealed to New Yorkers about the cost of living issues in New York, and these are very real issues. When you look at rents in New York City, they're extremely high. Young people came out to vote for Mamdani. We understand that. It was 100 degrees in New York City that day. Primary voters can be mercurial. We think there are three key things to take away from this Democratic primary. First of all, voters continue to be in favor of government largesse. They're still voting for more handouts. That has not changed. The second thing we took away was we're just not ready to deal with deficits yet, local or nationally. Voters continue to ignore deficits and vote for candidates that are promising more spending. So we think these deficits are just going to continue to grow until the bond markets just say no. But they haven't done that yet. The third thing we took away was the extreme left of the Democratic Party is not yet in the wilderness. This still seems to be where the energy is in the Democratic Party, on the far liberal left, or the group that calls themselves Social Democrats. These pro-inflationary policies have not been extinguished. That's another concern we have, and a message we take from Mamdani. Ultimately, we think Mayor Adams has a good shot to win re-election in November. The entire establishment in New York, both Republicans and Democrats, are probably going to try and stop Zohran Mamdani. But we'll wait and see. It could be very interesting. On to our third topic, the U.S. housing market. The housing market is in recession in the United States. The spring selling season was a bust. Every single metric we look at is indicating weakness in this market. Housing sales, starts, inventories, building permits, days of houses on the market, affordability, mortgage rates. We've got declining prices in 35% of the 20 big U.S. markets. Builder sentiment is negative. Sales commissions are down. Home builder equity prices are down, relative and absolutely. High mortgage rates, high asking prices, and high policy uncertainty have been a toxic mix. They are keeping home buyers on the sidelines. We wonder how long the Fed can ignore the weak housing market. We don't think for that much longer. Real estate represents 30% of consumer net worth and 17% of U.S. GDP. Those are big numbers. Housing is still important in the U.S. economy. Housing-related equities are approaching the buy zone, in our opinion. We think over the summer we're going to get an opportunity to buy this group. Buy them when it's really bleak. Buy them before the Fed cuts rates. Buy them cheap. The XHB companies, which is our favorite ETF, XHB, the companies are well run compared to their prior history. They really have professional managements that are returning cash to shareholders. The equities are increasingly attractively valued relative and absolute, and now is the time to do the work. As my old mentor Barton Biggs used to say, things don't need to be good. They just need to be less bad for a big rally to ignite. So there you have it, 3 things we think you need to know this week. Thanks for listening, and as always, do the work, stay the course, and have investment courage.